Peter Rose, Longwood Currency Trading. It's a pretty nice mid-September day in 2021. But the sad story for the day is, or the tale I want to tell, is that bad trading habits are really difficult to eliminate, to break. And I'll give you some background on me, because I've got I've got a couple of bad habits that I cannot break, and they cause me to lose a tremendous amount of money when I do these things. I recognize what's happening, but it's so ingrained in me, this particular one. Now, this type of thing probably won't be as drastic with you, because you probably don't have the same experiences that I do, which I'm going to explain. But you still have to be so very aware of how you're approaching your trading. Not so much from the information about trading that you know, but the mechanics of how you execute that. That if you build a bad habit, if you're listening to some dope telling you about something and you're trying to make that work and you're struggling to make it work, your belief system kicks in and you try to believe that that's going to work, and you work at it and work at it, and even the stupidest thing is going to work for a while until it doesn't. Because if you don't really understand what you're doing, blindly following a set of rules doesn't give you any confidence to it. And so you've put so much faith and trust in those rules, that you won't let go of it. You can't emotionally, you can't let go of it. It's very difficult. Now, there are ways that we can go about doing that. I mean, I've spent 50 years in the martial arts working with students who come to me from different athletic type backgrounds. If you're a highly trained athlete and you're really good, you pick my stuff up right away because you have no bad habits to break. But I bring in the weekend warriors, and they're really good at what they do, but they can't break those habits to make something else work. And I think it's going to be true in trading as well. Even though maybe you haven't traded before, you've done other things that give you I guess the idea that you could have the skill to trade. Yeah, I mean, you don't just wake up one morning and go, well, I think I'll trade foreign currencies. Yeah, let's do that. Just download the platform, and you don't do that. You have an interest in trading, or you have an interest in the economic factors in the two pair countries that attract you to participating in this market as a retail trader. Maybe you've watched a friend or parents or something do real estate brokering, or maybe they've sold life insurance or something before. So you have kind of an understanding of how finance works, how you get something for sale, and how that is presented to the public so that they tend to buy it. In things like trading, we call it supply demand, right? That's one of the forces that work on price action. Okay. Oh, there's a lot of people that say that supply demand is not part of the foreign currency equation, and I beg to differ with you. Yes, you're not having a supply or a demand of a product, you're having a supply or demand of a pricing consequence against the actions of two pair countries that are in fact exchanging hard product between them. And so I think it's a misnomer for someone to believe that the supply-demand theory is not applicable to currency trading. And we have a very loud bird, don't we? Oh, man. It's nice to be living in the country up here on my little mountain we're in. And we're up about 960 feet from sea level, which is rising because of global warming, but I just threw that in. Stupid. Habits. You build habits through your whole life. What causes you to build a habit? You buckle up your seatbelt every day. Maybe that's build the habit of protecting yourself in the event that, you know, you're in a fender bender or a serious car crash, or you are sure to pull the air out of a bottle of wine that you're not going to finish because you're taking the precaution that you know, you don't want the wine to spoil in regular air, and you're going to drink it tomorrow, but you need to pull the air out of it. Or you have to take a couple of warm-up swings before you step up to the tee and swing your golf club because you want to train those muscles. That's a habit. You see the ball players, baseball players, American baseball, before they step up to the plate, they're in the batter's box warming up. But when they step up to that plate, they take a few preliminary swings right in that position where they are. That's a habit that they've developed in order to tune themselves up and to be ready for the pitch that's about to come. What do we do as traders? You know, you wake up in the morning, you have your coffee, or you sit down and you look at the economic news, or you look at if you trade in the dollar, you look at the dollar index or the pound index or whatever index that your main pair is that you're trading. How's that going? What's the stock market look like it's going to do, or it is doing? What's the interest rate policy looking like it's going to change, because people are going to change their minds about how they invest depending on what that interest rate is going to be. Those are habits that you have. You just don't sit down and start trading. In currencies, you can if you're a day trader, because all of that stuff is ancillary. You can do all that kind of preparatory work and study anytime, but you don't have to do it preparatory to trading, because there's other factors that you're doing when you're day trading. If you're doing position trading, long-term trading, or you're swinging over a couple of days, 4 or 5 day period of time, well, you better sit down and you better know what's going on from an economic standpoint, or what we call fundamental view of what the markets are doing. Not only currency markets, but also, all the other markets. What's gold doing? What's your local stock market doing? What's the DAX doing? If you live in the United States, you probably ought to know what the Hang Seng is doing and the DAX. And what's happening in Greece? Is there some political upheaval that's happening, or in Colombia? Well, you just have to be kind of aware of what's going on in the world, because we're so interconnected because of the communications, that the information is readily available. So why not take advantage of that? Because you need that if you're going to be a long-term trader. So you need to develop the habit, the study habits, the preparatory work habits. There are other habits that we as day traders do, that we have to do in order to prepare for our work. Those are all habits that we have. But we also come to the table as traders with habits, life habits. Do we have the habit of brushing our teeth every night? Were we trained to do that? Do we have the habit of putting a seatbelt on? Do we have, what habits do we have? What habits do we come to? And if we've been involved in any kind of business as an entrepreneur, or at least in a business where you can see what's going on, what the business owner has to be concerned with, you're building habits of your interaction with that business as an employee, or habits that you need to have in order to be the entrepreneur. And you're going to bring those to the table as skills, or also as detriments to your currency trading. That is a long intro to what I'm going to be talking about, is the habits that I developed over 40 years as a real estate investor. I was also an entrepreneur. I owned karate school I still teach karate 53 years later, but as a owner of a karate school for a couple of decades, I was an entrepreneur while I was an employee, as a software engineer, while I was doing real estate investment. And so I have built up a lot of knowledge and awareness of these different aspects of how I'm supposed to interact as an employee, which is going to be very different as to how I can behave and act as a business owner, and as my attitude and protective mechanisms as a real estate investor dealing with thousands or hundreds anyway of tenants over the years, and working through them and having how I can help them, and yet at the same time, by me helping them, I have to make sure that that's also helping me as an investor. So one of the things in real estate that I believe very strongly in is buy and hold. It's a long-term thing. I'm not a flipper. I don't believe in that. You're paying a tremendous amount of taxes against that flip, and that's got to balance, come off the top of whatever it is that you make, balanced against the amount of money that you have to have at risk. I mean, if you're going to do a flip, you buy a house for $250,000 to flip for 3.25. Well, you know, let's say 350, so you got 100 spread, right? Well, you're going to pay 30-40% in taxes. You're going to lose $30,000 or $40,000. That just in taxes, and so you're left with 60, let's say, of the 100, and so you've risked 250 plus another 30 maybe that you had to put into it for your renovations. It probably works the other way. You buy something for 2 and you put 50 into it. Let's go that way. So you bought something for 2 and you put 50 into it. You're 250 deep, okay? So you're going to make 40,000 on a 250. Well, what's that divisor? You know, it's got to be balanced. It's got to be, you have to have the correct habits in order to make those numbers work for you. Because if the margin becomes too thin and you can't sell the property, you're carrying charges. If you didn't go in there with cash, your carrying charges and stuff are just going to kill you. Or maybe the market flattens and you got to sell, instead of getting 350, you get 280. You're 250 in. Well, was that worth it? Well, yeah, you made some money, but not enough to warrant the risk. And so there's all kinds of habits that you have to have as a real estate investor, whether you're flipping it or whether you're long-term. Because of the things that I just mentioned about the short-term flipper, my model was buy it and hold it. And I held some properties for 20 and 30 years. I had a 40-year career, so I figured this stuff out really early on because I wanted to learn the financial rules of the game. I wanted to learn the secret sauce of finance in general. How do you make money? I mean, if I was going to be if I was going to sell something on commission, I wouldn't want to make 5% on selling a $1,000 washer dryer combo at Home Depot. You know, I'd want 5% commission on selling a $600,000 residential property. So you're looking at paying a lot more taxes on a long-term real estate hold, but the dollar value of appreciation, the money you've pulled out from net cash flows, all that other stuff, all meet the model of building wealth. Now, in today's market, none of that is true for real estate, I believe, simply because of the uncertainty and the spike in where we are in most countries in the real estate market. I timed my exit from the real estate market based on everything that I knew. I left a lot of money on the table when I sold my last building. I got a premium for that building because the person who bought it knew that they were getting it at this year's price. I sold my last building last year, and they knew they were paying this year's price for it. But guess what? This year's price is probably $80,000 or $100,000 more than they paid for it. So they're ahead of the game from an equity standpoint right now, which is great for them. I got out of it because I was going to make an enormous amount of money, and I would have to have done the rehab to bring things up to code for the next tenant that was going to go in. This is a commercial property. And so I said, and I'm older. I was 71 when I sold the building. And I thought, I really don't want to deal with another tenant on a 10-year lease. I don't, yeah, the income would be nice. The net income that I would make from that building would be more money than most people earn a year. But I didn't want the aggravation of it anymore. I had bought my train ticket, as my stockbroker told me at one point. You buy your train ticket to get to a certain destination, and when you get there, you get off the train. You don't care how far the train is going to go further than that, because you're where you wanted to be. And when I started out, I had the advantage at 23 years of age of looking at my parents who retired. They had me when they were in their 40s, and so mid-40s. And so when I was coming out of college and going into the business world and the employment world, they were retiring, right? And so I got to see, they were very hard workers, and they were able to sell their house in Chicago and move and pay cash for the house that they bought in this nice retirement community out in California, in Southern California. And I saw the amount of money that they needed as what you would project that you would need if you're working away and you say, well, I'm going to retire and I'm going to need $1 million. You don't need $1 million. I've got $1 million. I retired with more than $1 million. So I got far more than what I really need in order to cover me for 30 years or whatever. And they had a little bit more than what they needed, much more than what they needed, but they weren't millionaires by any stretch. They weren't even close to that. And so they had a good life. They worked very hard and they had a good life. So I had that to look at. So I had an image of what I wanted my retirement to look like. I didn't want to have to work when I was 65. I didn't want to work when I was 60. You know what? Because of my real estate, I could have cashed out and I wouldn't have had to work. But I really enjoyed what I did. I was a software engineer. I really enjoyed that. And so I stayed with it. And, my retirement age was 66. So 66. And so I stayed until I was 68, 69, something like that. And so that Social Security, it's an 8% a year increase by not taking it. And so that's free money. Well, where do you make 8% on your money? You got to really work to get 8%. So I enjoyed what I was doing, so I did that. I was building money habits in the beginning to learn how to build wealth and to do all this stuff. And I did it through real estate. It was all long term. There's a purpose for all this story that I'm telling you. You can pay attention because, well, just pay attention. I followed my rules for 40 years in that respect and cashed out and just retired. I retired in 2015 and I hadn't sold my last couple of buildings at that point because I had cash income coming in. I just get tired of software engineering. Actually, I love software engineering. I just didn't like some of the people that I had to work for because they were way too anal and wound up and wanted to work 60 hours a week, and I just wasn't seeing that. So I'm going home. I'll give you 45 and that's it. If you don't like it, I'm out the door. And I had to do that a few times in my career because nobody could understand why I wasn't willing to work 60 hours a week. But out of that came an understanding of how to create wealth and how to create cash flow. And I thought, I got interested in the currency markets in 2007. I was still involved in real estate. I was still employed. And so I just approached it as an academic exercise, doing writing computer simulation analysis and all that stuff. I mean, I got a degree in physics, and I worked as a computer software engineer for 33 years. So, I mean, I'm technically oriented. I enjoy academic pursuits, and I looked at that as a real complex problem to solve. And so I did that until 2012. I thought I had sold one of my buildings at that point. I thought, well, I could open a mini account. I could probably do this trading thing. And of course, that went right out the window. Of course, I did a couple of years of simulated. I had a trading account. I did trade in it, and then opened a mini account and flatlined that. Did a little bit more study, opened another mini account, lost that. Well, I must need more education. I must need more information, because that's what you do in real estate. You need more information. So I did that. I spent, another, I don't know, probably 4 years trading in a simulated account, 5 years doing simulation analysis and watching YouTube videos. I've told you all this before, and the hundreds of books that I've read and all that stuff, doing more study because I figured I needed more information. I was working in a $40,000 simulated account because I had the money to fund a $40,000 live account. So why wouldn't I work with the amount of money in my simulated account that I had in order to go into trading? And so when I had done all the simulation work and done all the academic stuff and had been really successful in my simulated account, I mean, there were stretches where I was doing 15% a month. You say, well, you can't do 15% a month every month. Some months you'll go 15% down. Well, okay, if you could do 15% 4 months in a row and you drop a 15 and you average that out and you do that every quarter and you average that out over the year, you do really, really well. And so all the simulations and stuff that I did on the computer and all that stuff, because I had a process, worked. And so why wouldn't I think that would work in the real market? And for the real market stuff, I was really looking at the presentations on YouTube, because there was the live person saying, oh, he's driving around in his Lambo and he's got the gold and all that stuff. And despite the fact that he's an asshole, he made some money. And so I trusted that. Most of them don't make the money, and they rent their Lambos, and the gold chains they're not really gold chains. And the houses that they live in are rented. Some of them are legit, but they tend to be pretty low-key. They flash Lambos and stuff around. But I didn't know that, because you don't find that shit in real estate. You get the hucksters that are talking about no-down real estate and riches and all that other kind of crap, and Grant Cardone's out there screaming about buying funds or real estate funds and all that stuff. You have to know what you're doing. You can't just hand your money over and do it. But regardless of that, I didn't know that in the currency market that don't pull the curtain back and see the little man behind the curtain. It never dawned on me. And so the habits that I had from my 40 years of building habits in real estate worked totally against me in the currency market. And as you know, I've lost $50,000, and it didn't take me long to lose 40. Because of those habits that were good in real estate, but weren't applicable in the currency market. And underline your trading, no matter how much information you have, and no matter how much mechanical information that you have, if you have a bad habit and you don't recognize it, you're just going to go out, and then you're going to blame the system. It might not be the system. Most of the systems that are being presented out there on YouTube are crap. It's just stupid. The fact that one guy got it to work and he makes it work, he's seen other things. There's a guy out there that teaches that London Open thing. Okay, he can make it more than other people because he's got the experience and he's looking at other things other than just the little squiggly lines that he's telling you about when he's on there talking about what he can do. Or the guy that trades an engulfing candle pattern. He sees things that you don't see, and he has experience that you don't have. Or maybe he's just bullshitting you too, because there's a lot of guys out there that are doing that. But they'll sell you a course for a couple of $1,000, and they'll teach you the difference between a trend line and a support and resistance line, and how to read a Fibonacci fucking chart. But they won't teach you how to trade. So not only do you have that going against you, but if you have bad habits, just study habits or learning habits, those are also going to act into that, and that's going to compound it. But you won't recognize that part of that is because of bad habits. You'll blame the system, and rightly so, or the teacher or whatever it is, and rightly so, because most of them are only teaching information. That's all you're getting is information. You're not getting the stuff that's under the sheets. That's the stuff that I was missing. And it's very difficult to get that unless somebody understands that there's something under the sheets there that needs to be brought forth to the front, right? And so that is the bad habit that I have. There's a bad habit from real estate that I can't shake. It just can't shake because it is so ingrained in me. And even though I'm in a short-term environment, day trading environment, where when I follow my rules, I make really, really good percentage returns on bank. And I'm not talking about 3 or 4% a month. You know, it's a lot better than that because it's simple. As long as I follow the simple things, I'm okay. But when I stumble on a situation which is very reminiscent of 40 years of very similar situations in real estate, I'm sorry, but I fuck it up. Can't help myself. Now, some of the folks that I've worked with have not the same particular bad habit that I have, but they have bad habits and it affects their trading, and I point that out to them and I can show them how to work around that or how to get over it. Because if I can catch that early enough along, and I can find somebody that believes in me enough, we can fix that. Talking about the karate and my students that come in, they have trust in what I can do. And even though they have really, really bad habits from past athletic work that they've done, I can change that because I can show them what's going on under the sheets and fix that. I could do that in karate because I started learning karate before I had any bad habits in anything. And I'm not saying that the real estate is a bad habit. It's a habit that made me $1 million. Okay? So it's not a bad habit. But if I try to take that same skill and use that in the currency market, it's a bad habit. So there's your difference. You know, we talk about good trades and bad trades. You can lose money and it's still a good trade. Because you lose money doesn't make it a bad trade. A bad trade is when you do something stupid. Or when you're thinking about it, you go, oh, I know the risk and I'm going to shoot the potatoes here and I'm going to try to make this runner go. Oh, man. The fact that I'm having trouble making this transition in no way limits my enthusiasm for the trading itself, because I spent 40 years developing this habit that made me millions of dollars. I'm not going to be able to change that overnight. It's already cost me $40,000 to do that not many years ago. And so I went back, I had a $5,000 left, as I've told you, and what's the problem? And I thought the problem at the time was some mechanical problem. And because I wasn't playing with a lot of money, it started to work for me. I already lost $40,000. It would be another $5,000. It was just shit dust, and I had more money beyond that. So I can do this. And I took that $5,000 account. It was a live account, and it was a 4.5, I don't know, 5 months. I don't know what it was, and I doubled it. I was within a couple of $100 of doubling it, something like that. I don't remember, because that's not significant to me. Doubling the account is not significant. It's the fact that I followed those rules. And the reason I followed those rules is because the money wasn't a factor. And it wasn't throwing me back into my real estate habits. Once I took that account and had it doubled, it didn't impact me that I had $10,000 now instead of 5. It impacted me that if I follow my rules, I've got this. It is simple. It took me, when I first had that $5,000 and started trading it, I was trying to trade through this stuff and figure out what the issue was. It took me 15 minutes to sit back from the thing and say, oh, let me try this. And I go, really, is it that easy? Is it that easy? Is it that simple? And it is that simple. But then when I go up, and I've you know, as you know, I sold my last building right after that debacle, and so so I was able to fund my account into a pretty good size account, and there's a lot of money on the side to add to that when I'm not when I work my way out of this real estate issue that I have, because I'm still losing money as I go through, but I'm losing less as I go through, as I'm overcoming this enormous protective habit that I have, that I got from real estate. God, I hope you guys don't have something like that that would impact your trading. And if you do, if you've been involved in real estate before, if you've been involved in different kinds of things, man, find somebody that's successful in trading that will address how you have to change the way that you think about that in order to make that trading work. It's simple to do, but it's very difficult to execute if you don't understand why you're having the problems that you're having. Your tendency will be to blame the system or the person that's trying to teach you, or the book that you're reading, or whatever. Oh, this is shit, blah, 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 blah. Well, maybe it is. That could be your first problem. But if it isn't, if you've got somebody that's working with you and they're showing you stuff, don't be quick to say that what they're teaching you is shit. It's that you may have an underlying problem, that because they're not a really good educator, they just know what to do to trade, they might not be able to recognize that in you, and they might not be able to help you out. Or if you just buy a fucking course from somebody and you're going along there doing and connecting the lines, you've got to figure that out. Is the coursework good? And I have a flaw. And if you discover that you have a flaw, can you fix that yourself, or do you need some consulting in order to change that? Because you should be able to make the currency trading work, because it's simple. Even if you're a long-term trader, there are steps that you can take, and it will, if you're a long-term trader, there are a couple of things that you absolutely cannot do, that everybody is teaching you what to do, until you figure out what you're going to do. The biggest danger, by the way, folks, in long-term trading, in learning trading long-term, like multi-day carry trades, is how many times during the month are you going to be executing trades. If you're a long-term carry trader, even you're swinging 4 or 5 days at a time. So that might mean that you trade 4 times a week or a month. Maybe you get 1 trade off a week. 2 trade. Let's say you get 2 trades off a week. That's pretty active. If you're up on the daily chart, or even on the 4-hour chart, you might be trading once every couple of weeks, because you got to give that. You're not looking for 50 pips, for Christ's sake. You're looking to make 3 or 400. If you're not, somebody's lying to you about the principles of what's possible to do in the markets. And so if you're violating a couple of rules and you're wanting to do long-term trading because you feel you're safer up there, it's going to be very difficult for you, because you're only going to trade once a month. or say twice a week. So you trade 8 times a month. Man, as a day trader, you can trade 8 times a day. I don't think it's necessary to trade 8 times a day. I trade, I might make 1 or 2 trades when I'm following my rules and waiting for my entry to take place. But if I'm in there in a chop market, you have to change your approach. And I might make 8 or 10 trades in a day. I've made 20 trades in a day and come out way ahead. So I was trying to figure out what that motor running in the background is. You're interrupting my video. That's my generator. It kicks on. Today's Saturday, so it kicks on every Saturday morning, and it runs for 20 minutes and runs through its check things. As a currency trader, every time you sit down at the table to trade, you got to run through your check off list, and you got to run your little program in your mind so that you are certain that your habits that you have in trading are not habits working against you, that they're working for you. What I want to share with you is that you cannot break a bad habit. If you're an overeater, you can't break that habit. You have to change the habit so that it deflects off. And so that's what I'm working through in trying to alter the way that I think about the issues that I'm facing in my trading. I know exactly what they are, and I'm working with them so that the losses become less and less. Once I figure that out, I'll go to I'll put more, back the truck up and dump more money into the account, and then we'll go, and I can share all that with you as I'm sharing the problems that are involved in it from somebody who's experienced in this stuff. You still run into problems. You're never going to not run into problems. You know, the concept of learning currency trading is to learn how to solve the problems when they come up, not avoid them, because you can't avoid that. You can't avoid a pin bar. So you need to learn how to solve it. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.